Good morning, nieces and nephews. It's your Uncle Charles here. Welcome back to my YouTube channel where we do unbiased price action analysis. Well, guys, looks like the market closed a little lower than it did on the previous day. Looking at the daily chart, you can see that yesterday's selling area was last Friday's buying area. Overall bearish price action for the last couple of days. However, once again, we are gapping up a little bit relative to where the market closed end of day yesterday. I still have the same levels, guys. 591, 592.6, 595 or higher. But before we get to the levels and the plans for today, New Year's Eve, I want to take the time to explain how we use the levels, because that's what I do here. I identify the levels and the setup so we can trade it unbiasedly in real time. But I got to make sure you guys know how at least I use the levels. I want to make my videos educational as well. Okay, so what I like to do, I'm a day trader, and sometimes once in a while I'll swing trade if the setup is right for it. But when I day trade, I identify all my resistance levels and support levels on the daily chart, and then I like to use the 15-minute chart to trade it intraday. Now, I have a Discord where I write all my plans, my setups, my trade ideas for my members. Okay, and I wrote here yesterday, no longs or calls unless 589 and 591 can clear. This is at before I wrote this before the market opened. To put 592.6 and 595-ish in play. If 587.5 fails, 586 and 584-ish are in play below. Okay, these aren't predictions, these are just trade ideas based on what the price action is going to do. If it clears 589 and 591, I would have looked to long. And if it break down the 587.5 level, I would have looked to short, and I had price targets, okay? Now we go to the 15-minute chart where Uncle mentions he uses to trade. And you guys can see yesterday's price action where it opened. I'm going to show you guys right here. All right? That was yesterday's opening candle. That red line, that's one of my levels right there. That was the 587.5 level, as mentioned in my Discord and in yesterday's YouTube video. You guys can see, when do we go short? When we break down support. It broke down 587.5. It hit 586. You want to play it level to level. Good for a level to level move and leave a runner. And it went as low as 584.4. 584-ish. Okay? Now, the next part I want to talk to you guys about is very, very important as far as being a price action trader. This part, this knowledge was a game changer for me. And it is trading with the traps. Okay? Now, something that the market makers love to do is they like to create areas of liquidity. Okay, what are areas of liquidity? That's when the market makers, they love to create stop loss, support levels and resistance levels, and underneath those support and resistance levels, you're gonna get a cluster of stop losses. And a lot of time you can see with this picture to illustrate, like they like to break down the stop losses. Not that they actually want to push the market down, but they break down the stop losses so they can catch everybody's stop loss, take them all out, get everybody stopped out before pushing into the real direction that they want to go to, okay? This is a trappy thing that the market makers love to do, but how do we use this information to our advantage? If you guys been following Uncle Charles long enough, you guys know that the greatest trade setup of all time is the false breakdown setup or the false breakout setup. In this case, we can talk about the false breakdown because you see here, guys, you guys see here how we broke down 587. You guys see here how we broke down 586. Market makers went to collect the stop losses. And then what did they do? They recaptured a lost level. False breakdown setup. Trapped us with a breakdown only to recapture the lost level to push it back up. Whoever had stop losses down here got stopped out, and they probably was not happy when the market popped. Look at that. 586 recaptured. 587.5 recaptured. Keep in mind, guys, that these were all alerted in the Discord. Uncle Chartist is your extra pair of eyes for the chart, for the market for you. When you join my Discord, you are getting an extra pair of eyes. Not only are you getting to be part of an awesome trading community with lots of awesome traders, but you get an extra pair of eyes to help you watch this market when we get into setups to identify the levels. And that's what happened when we had the false breakdown setup. Uncle Charles alerted to the group. False breakdown setup. Look at that. 3 in a row intraday for us to trade, for today trade. I love it when there's some volatility, when there's movement. Okay? I hope you guys understand the false breakdown setup and how Uncle Charles trade using the levels. Okay? This is how we combat those trappy moves that the market makers love to do. We combat it by trading with the traps. So when they go stop loss hunting, they go hunt for the stop loss. And after they hunt for the stop loss, they'll give us the false breakdown or the false breakout. We capitalize on it. We trade with the traps. Here's an example on QQQ on the daily chart. If you are a swing trader, look at this trend line that I have for QQQ here. I had from September 26th high connecting to November 8th and November 11th high, and also December 13th high. We had a breakout, guys, a breakout on December 16th. So if there was a bunch of stop losses, at least if you're a bear, you're gonna look to short from resistance. If there was a bunch of stop losses, it would be just above that blue trend line. And we got the breakout. This breakout hit all the stop losses, but what happened after? What happened the next day? Holy moly donut shop. We had a false breakout. Stop losses got hit, and man, they got smashed and absorbed, and that's when the market dropped. This is a false breakout. This is how you trade with the area of liquidity. Does that make sense? And then we had a false breakdown. Look at that. You guys see? We had this up green trend line, multiple tests, starting from November 15, multiple tests as support. And then this December 20th, when we gap below, hit all the stop losses before bouncing $30-something. You guys see? This is how the market makers, they go for their stop loss hunt. And this is how we battle against it. This is how we combat it. This is how we trade it to our advantage. I hope, okay, so I try to make my videos educational. All right, I do have timestamps in the description below if you guys ever want to just skip past this part, okay? But let's just get straight into the price action plan for New Year's Eve today, okay? I hope you guys found value in that. But with that information I've given you, I want to give you guys the next part. Resistance at 591, okay? And at 592.6. That will put 595 in play. Okay, 591 is important because 591 was a buy zone and yesterday became a sell zone. So bulls need to recapture that level to give us those upside targets. Now, the big target I'm watching is the 595 fib level, but it's also based on the white uptrend line that I have here. I cannot favor a bottom is in unless 595 can recapture. Now, it's not guaranteed a bottom is in if 595 is recaptured, but it would be a step in the right direction, okay? Overall bearish below 595. So bulls need to recapture 591, 592.6, and 595 to put 597 and 600, well, not 597, 598 and 600 all back in play, okay? Because overall below 591 is bearish. Loss of 589 and 587.5 would put 586 and 584 all back in play. Okay, and loss of 584 will put the next fib level at 582 in play. I would expect some type of bounce there, but if not, then lower we go. 580.5 and 579 as targets below. Triple Q, you guys see I mentioned that green up trend line yesterday. That trend line also acted as a resistant level. Okay, so from here, bulls need to clear 519 and 520.5 to recapture that green trend line and put 522, 523.5 and or higher in play, because otherwise staying below 519 keeps the price below the green uptrend line, keeps the breakdown intact, but follow through would definitely be needed. 517 and 515.5 breakdown will be the trigger you'll be looking for or want to look for to enter puts. Put 514, 512.5, and 511 all back in play. Tesla with the, definitely, oh my God, it was crazy follow through. After the dark cloud cover candle, we had a beautiful move the next day to the downside. Yesterday, it wasn't as much of a volatile day, but it was definitely bearish. As of right now, I have a fib level. I have a regular support level 422, but fib level at 420 and 417.6. Okay, bears really need to break those levels down to send us lower and really make the bulls cry. But if we're gonna get a relief bounce, then resistant levels must clear. 423.5, 425, and 427 must clear to put 430 or higher in play. Remember how I show you guys on the 15-minute chart? That's how you want to trade Tesla as well, using the levels 15, 30 minutes. Now NVDA back tested the downtrend line that it recently broke out, and it found buying pressure. Will there be follow through today? There's been some tough selling pressure around that 140 level as well. So now that we got the back test, bulls need to show follow through here, do their job, clear 140 to put 142 and 143.5, 145, and 148 all back in play. Now, if bears really want to get bearish and make yesterday a dead cat bounce, then once again, 138, 136.5, and 135 all must fail. The price action needs to show follow through on what it wants to do, and I think it's going to give us a direction very, very soon. IWM is below our 222 and 224 fib levels. Well, it closed below yesterday. It's trying to gap up now. Okay, is this a W pattern that could be forming? If the answer is yes, stay above 222, clear 224, and must clear 226, which is the pivot high from December 26th. It got to get above 226, and I would be a lot more bullish on IWM. Maybe we'll get the W pattern. Otherwise, breaking down 222 and 220 would definitely be bearish follow through, and I think a test of 216 or lower would be much higher. The odds would be much higher if we break down this time around. Apple with the DOGE yesterday, okay, levels have support at 253 and 251.5. If they're not setting up for a bounce or a reversal here, those levels must fail to put 250, 248.5, and 247 in play. If it's a reversal time after this little pullback and we're heading up higher, I need to see 255 clear. If it does, 257 and 260 plus are all in play. Amazon still flirting with that 220 fib level support. I need to see it fail. Okay, 222 and 220 must fail. It didn't officially fail, but if it does, 218 and 216 incoming. Okay, 218 is a critical level here. A couple of bounces over there already. But to take the bounce really serious, I need to see more upside. 223.5 must yeah, 223.5 must clear. There's a gap around there. And then I have a critical fib level at 226, which is also based on this downtrend line. So if there is a bottom, I need to see 226 clear. That will put 229 in play, and above 229 would definitely be bullish with 232 or higher incoming. Meta trying to bounce and is trying to gap up right now. For me to take it more serious, I need to see 595 and 597 clear to put 600 and 603 in play. Otherwise, 593 and 591.4 fails again. I think we're going to head down a lot lower this time, all the way back to the low 580. So bulls need to do something soon before the bears capitalize. Microsoft, I have some new levels on Microsoft. From here, I need to see, to be bullish, I need to see 428 and 429.2 clear, okay? And that would put 431, 433, and 435 in play with the gap fill around 438-ish. I'm overall bearish below 429.2. Next support's at 426. If it fails, 424, 422, and 420.8 with 419 below are all in play. DXY is still consolidating. Like I said to you guys before in the past, DXY, I don't trade this, but I like to watch it to help gauge the SPY. And it's chopping, it's not giving us a direction, so it's not helping very much. But we do have a range with the chop range, the top of the chop range being at 108.5, bottom of the chop range being at 107.5. So anything in between is noise. I need to see an explosive breakout of this range. And if DXY is bullish and it clears that resistance level, that could mean SPY is bearish. And if DXY is bearish, breaks down no support, that could mean SPY is bullish. Okay, so keep an eye out what direction DXY chooses. And it might be when the SPY gives us his next leg or next big move too, all right? Just be ready for anything. Now, coin, I had a fib level around 265. I mentioned I'd be bearish below it. Coin gap below it. And you know, like I said in yesterday's video, when that happens, you just got to watch for the next level, you know, get ready for the next setup. And I had 260 and 258 as a support. We broke those all down, and it gave us an incredible move to the downside intraday. But here we are gapping up now. And I do have resisted at 263 and 265. If we are going to long, I need to see those levels clear. All right. As of right now, I do have support at 260 and 258. If those levels fail again, it's going to be very bearish with 255 or lower in play. Trust me, coin moves. This is not for the faint of heart. So if you love volatility and you're good at price action trading, this is definitely a stock you want to take a look at and give it a try. At least with paper trading, give it a try till you're comfortable, and then you do it real money. Yeah, coin's incredible. Doge, not so much. 30 cents to 34 cents is still the chop range. I'm watching for the break. Okay, 34 cents clear, I'm longing. 30 cents fail, I'm not gonna short, but that will just mean it's very bearish. We'd have to wait for a better opportunity. Okay, and Bitcoin is still consolidating here. It's looking like a head and shoulder, but it did not break the neckline. Neckline's around about 90, 92K, 91K. So unless it breaks down, we could be setting up for a bounce. And if 96K, 98K, and 100K clears, it's going to be really bullish for Bitcoin. All right, guys. Thank you guys so much. Happy New Year's to you all. I love you guys. Peace.